Hi, this is Lara at Elliott Wave Stock Market with your daily extra video update after the session Tuesday 27th of September has closed. We've got some support from volume for upward movement for Tuesday, so it's reasonable to expect another green daily candlestick for Wednesday. It might also turn out to be a doji though, a warning it might not be as clear and strong as that volume suggests. I'm expecting 2 or 3 sessions of choppy overlapping movement, and after that I'll be expecting some downward movement. The target for the midterm is overall a higher movement at 2233, but it's going to be a choppy, overlapping, torturous affair to get there, I expect. I want to notice a couple of things, some classic technical analysis at the weekly chart level, so I'm going to jump into that first today. Here's the previous all-time high at 2134. Here's that short-lived bear market with a couple of rather dramatic plunges within it. And we broke above a trend line back here the first week of July this year, 2016. This trend line is important. I've drawn it from this prior all-time high to this swing high here in July 2015 and extended it on out. Price found resistance a little bit below here and here, almost absolutely perfectly here, again a little bit below here, and it was this week here, this is July, the first week of July 2016, where price finally managed to break above resistance at that line. This line is quite shallowly sloped, it is very long held, it is repeatedly tested, it has strong technical significance. Price broke through that trend line here and moved up and away, and then it came down and has now come down and retested support now at that line, further strengthening that line. It would be very typical and a reasonable expectation to expect that price will now continue to move up and away. The mid and longer term trend is very obviously still up. That's what our moving averages are telling us. And so with a break and then a retest, this is very typical behaviour. Let's expect the most common pattern should unfold, that price will continue to move up and away, and that view aligns very nicely with the Elliott wave count. On balance, volume gave us an important and strong bullish signal with a move above support at this little yellow trend line, and on balance volume has been working quite nicely in recent months with trend lines, so I'm going to give this a reasonable amount of weight. At first glance, a couple of weeks ago, it looks like we've got good support for overall upward movement, but we need to look inside this week to see what's happening at the daily chart level with volume bars. So let's do that. As price has fallen here, it's come on some increase in volume. And now overall price is moving overall up so far since the low back here, but overall it's coming on some decline in volume. We have more support for upward days here compared to prior downward days, and more support for this upward day here compared to these prior downward days. And so overall I would say that there's a little bit more support for upward movement than there is for downward movement, but it is concerning for a bullish case that we're seeing an overall decline in volume, with the exception of this strong volume spike here. Now this is an options expiry day, but it's only a monthly options expiry day. It's not quarterly, and usually those options expiry days occurring toward the middle or end of the month, just before the 20th, don't usually have volume spikes. So I'm a little bit unsure as how to read this one. In the short term, it would have been expected to be followed by downward movement. We did get 2 red daily candlesticks, but we didn't get new lows, so price didn't really move lower. And so if you were reading this strong spike in volume as telling us we should get more downward movement, it just didn't work. This upward day has a little bit of support from volume, and so overall I'd be expecting that we're going to probably see overall upward movement for Wednesday's session. That short-term pattern has been mostly working for the S&P lately. But what is pretty clear about this market is there just isn't a lot of interest in it. When we notice price rising, we can see some increase in volume. When we notice price falling, Often, not always, we're seeing a decline in volume, and when we see price fall, the volume is often lighter than previous upward days, with the exception again here of this day. Here we have some falling price with rising volume, but this volume is still lighter than prior upward days. Here again, falling price with some rising volume, but declining at the end and still lighter than these upward days and these upward days. And so my conclusion has to be that when price is falling within this market lately, it's mostly falling of its own weight. There just isn't enough selling pressure yet from the bears to make a deeper and sustained pullback. When price is rising, it's almost drifting up, almost due to a lack of resistance above, rather than any real buying power as well. And so I have to conclude that we're probably going to see a continuation of this choppy, overlapping, slow, tortuous rise, eventually, hopefully breaking above resistance about 2190. And if it can do that, then we might see a little bit of an increase in strength and volume. ADX is still declining. It's telling us that this market is not trending, it is consolidating. Price is delineated with resistance about 2190 and final support now about 2120. So it's reasonable to expect price to swing from resistance to support and back again, and only to end each swing when price reaches resistance and stochastics reaches overbought, and then price reaches support and stochastics reaches oversold. But stochastics isn't working as it normally would for this either, and so I think we need to narrow our expectations for it in this instance. It didn't quite reach oversold here, and price didn't quite reach down to support. We got an upward swing, price reached up to resistance, but stochastics didn't quite reach overbought. So let's expect that stochastics isn't going to quite get into overbought. This is probably the end of the upward swing, and we may well see an overall choppy, overlapping downward swing until stochastics gets close to oversold and price gets close to support. That short-term view also fits with the next few days' expectation for the Elliott wave count quite nicely. On balance, volume is working nicely with trend lines. It gave us a bullish signal here. If it turns back down, expect again for it to find support at the purple line. If it continues on up, I'll be expecting resistance at this yellow line. If it turns down, that's going to allow for a reasonable drop in price because the line has a reasonable slope. This line is only reasonably technically significant, not highly. It's long held, it's repeatedly tested, but the slope is too steep for good technical significance. RSI's pretty much almost exactly at neutral, plenty of room for price to rise or fall. There's no short-term divergence here between price to indicate weakness. Bollinger Bands have managed to widen a little, but now they're steady again. Some volatility has returned to this market, but it's not increasing either. Now let's have a look at the Elliott wave count very quickly through the weekly chart, because if you want to see a deeper explanation of that, look at yesterday's video. I'm trying to make the length of this video a bit more reasonable. Both wave counts see cycle wave 4 over here and cycle wave 5 underway, unfolding as an impulse. So far we have 1, 2, 3, 4. We need a fifth wave up. The third wave is shorter than the first, so that the core Elliott wave rule stating a third wave is not the shortest is met. The fifth wave will be limited to no longer than equality in length with the third. The limit is at 2302.47. The third wave has a 0.618 Fibonacci ratio to the first. If that pattern continues, that would be very satisfying analytically. Primary 5 will reach 0.618, the length of primary 3 at 2233. Let's have a look at the daily chart where primary 4 has ended down here, and here's that lilac trend line, which is on my weekly technical analysis chart and my weekly Elliott wave chart, and I've copied it over to my daily Elliott wave chart. It's almost perfectly shown us where these few days found perfect support. If we get some more downward movement, which is what the Elliott wave counts overall expecting short term, then I'll expect again price to continue to find very good support at this line. There are only two structural possibilities for primary 5, an impulse or an ending diagonal. Because from this low to this high we now have a completed zigzag, an ending diagonal is indicated, because an ending diagonal requires all of its subwaves to be zigzags. The second and fourth waves within diagonals are usually very deep, and the fourth wave has to overlap back into first wave price territory. The rule for the end of the second wave is that it can't move beyond the start of the first, below 2119.12. Intermediate wave 1 lasted a Fibonacci 8 trading days, and so it would be quite reasonable to expect for this wave count to have good proportion and the right look. For intermediate 2 to last either a Fibonacci 5 in the first instance, or maybe more likely a Fibonacci 8 days in total. So far it's only lasted 3, so we've still got at least 2 more days to go, and more likely 5. Let's have a look at it at the hourly chart level, where 1 ends up here. So far we have a 5 down. This would be A within the zigzag. We need a 3 up complete, and then a 5 down. I could label minor wave B as complete here as a quick, sharp zigzag, but I think it's too brief, and I think we really do need to have more patience with this B wave. B waves are the worst. They do not present good trading opportunities. I am expecting that minor wave B will, when it's over, look like a pretty typical small consolidation within a consolidation. I expect it's going to be choppy and overlapping, but the problem with B waves is they exhibit the greatest of variety in form and structure, so they can be quick, sharp zigzags equally as likely as more time-consuming and complicated affairs. In looking at how long I expect intermediate wave 2 to last, so that the whole of the structure has a good look in terms of proportion, I would expect minor wave B within it to last longer than 1 day. And so we either have a 5 up unfolding for a zigzag for minor B, or we have a 3 up complete for a flat combination or triangle for minor B. Overall, either way, I'd be expecting overall sideways and slightly higher movement for it to end. The most likely point for it to end is probably about 2165, the 0.618 Fibonacci ratio of minor A. Because A is a 5, B may not move beyond its start above 2179.58. The target range for intermediate 2 to end remains the same. Second waves and fourth waves within diagonals are usually very deep. They have a common range from between 0.66 to 0.81, the depth of the prior wave. So here that gives us a range for intermediate 2 from 2140 to 2131. When I know where B has ended within 2, then I can use the ratio between A and C to calculate a target within that range. I can't do that if I don't know where C starts. I'm not going over to the alternate in this video either. Let's just jump back through classic technical analysis and have a quick look at VIX and the AD line. I'm really only using these to indicate any short-term divergence because it's been proven quite recently to be fairly reliable in telling us the direction for price for the following 1 or 2 days. It's not useful at all actually in telling us how far price is going to move. In other words, it's of no use in calculating targets so far, but it is useful in telling us direction. I don't see any short-term divergence today between inverted VIX and price to help tell us the direction for price for the next 1 or 2 days. Likewise with the AD line, here we've got some bearish divergence, and it told us to expect 1 or 2 days of downward movement. That's exactly what we got. 2 days of downward movement. Again, I'm not seeing any short-term divergence between price and the AD line to indicate direction for the next 1 or 2 days. That's all from me with your S&P analysis, extra video update for you, and I hope that all of our members are having a fabulous day.